Budget 2009, brought to you by Deloitte.
Madam Speaker, the revised estimate of revenue for 2008-9 is 14.2 billion rand less than we planned in the 2008 budget. For the year ahead, the main budget revenue estimate is 50 billion rand lower than we projected in February last year. Against the background of slower growth, depressed trade and declining company profits, in setting the gross revenue target of 659 billion rand for the year ahead, we have taken into account the need to provide relief to households and encouragement to the business sector while continuing to broaden the tax base through which the requirements of the fiscus have to be met. The proposed adjustment to the personal income tax schedules will provide relief of 13.6 billion rand to individual taxpayers, compensating fully for the effects of inflation and providing further relief mainly to lower and middle income earners. The tax-free income threshold next year will be 54,200 rand for taxpayers below the age of 65 and 84,200 to those over 65. Now this means that Mr. Vavi there and Mr. George next to him should say less about tax policy. Their members are not going to pay tax anymore. It is, of course, gratifying to note that there has again been excellent progress in expanding the number of registered taxpayers. In view of progress in simplifying the tax return process and the waiver of the annual filing requirement for qualifying taxpayers, it is proposed that the current standard income tax on employees, the so-called SITE system, should be discontinued by 2010. I appreciate that the administrative reforms, the adjustment to e-filing arrangements, and the construction of more effective communication channels between SARS and individual taxpayers are huge reform projects on the one hand, and sources of numerous personal inconveniences on the other. But we are getting there, and these improvements will serve as a platform for improved fiscal integrity for decades to come. The mineral and petroleum royalties, I'm sure honourable members would be aware of the fact that the royalties are meant to be effective from the 1st of April this year. But after discussion with both labour and the mining industry, and taking into account the potential impact of the economic slowdown on the mining industry, I propose to defer the mining royalties regime from this year to 2010. This provides a boost to the industry of around 1.8 billion rand, which will assist in minimizing job losses. I've agreed with the mine workers' unions and the Minister of Minerals and Energy that government will consider establishing an agency to be jointly managed by business, labour and government to invest in economic development in mining towns or in labour-sending areas affected by retrenchments. Madam Speaker, perhaps it's because miners are used to digging deeper that their creativity and commitment to improve conditions for mining communities serve as an example of the kinds of partnerships required to ensure that South Africa emerges stronger from this global crisis. If the new development agency can be established this year, I'm sure an allocation will be made towards its activities in the adjustment budget. Tax tips continue to make up the majority of tips for Trevor submitted. Mr. Saul Margolis of Johannesburg called for a tax to be imposed on incandescent light bulbs to encourage people to use compact fluorescent light bulbs and save energy. Mr. Margolis, I have asked that this be included in the revenue proposals this year. We propose taking further steps to encourage energy efficiency and reduce harmful emissions, some of which have tax implications. An incentive for investments by companies in energy-efficient equipment will be introduced in the form of a supplementary depreciation allowance. The levy on plastic shopping bags will be increased from 3 cents to 4 cents. An increase is proposed in the international air passenger departure tax, which was last raised in 2005/6. The existing excise duties on motor vehicles will be adjusted to take into account carbon emissions. It is important, furthermore, that we should encourage South African companies to take advantage of the clean development mechanism established in the Kyoto Protocol. A favorable tax treatment will therefore be introduced for the recognition of income derived from the sale of emission reductions. Customs and excise duty. The tax code discourages another category of atmospheric emissions, Madam Speaker. I refer to the duties on tobacco products. This year's increase in the duty on cigarettes and cigars is 13%, with somewhat lower increases in respect of cigarettes and pipe tobacco. A packet of 20 cigarettes will now cost 88 cents more. I also advise that a bottle of wine will cost 10.5 cents more and a can of beer 7 cents more. Now, one of the most innovative tips I received this year is from a gentleman. I think he's in the Boland somewhere. His name is At du Plooy. He writes, "Please be a little more lenient on whiskey for the old folks. We have so little to enjoy. You know, things that happen after dark no longer happen. All we have left to enjoy is a little entertainment before supper." He asks for leniency, reminding me that this will ultimately be for my own benefit as well. A bottle of whiskey, Mr. du Plooy, goes up by R3.21. Let's turn to fuel levies. As road users, Madam Speaker, I haven't heard what... you survived without any whiskey. Before and after dark, Baba. As road users, Madam Speaker, we have gained some advantage since mid-2008 from lower international oil prices. As road users, we also know that there's a substantial increase in spending on maintenance and construction underway, and we still face a heavy burden of road accidents and associated compensation claims. There are costs that have to be covered, and so there will be increases in the fuel levies on the 1st of April this year of 23 cents and 24 cents per litre in respect of general petrol and diesel levies, and 17.5 cents in the road accident fund levy. As indicated last year, it is proposed that the general fuel levy should form part of a new municipal revenue arrangement to replace the former Regional Services Council levies. So in 2009/10, 23% of the general fuel levy will be earmarked for metropolitan municipalities to support their expenditure on roads and transportation infrastructure. Now let's see it being spent.